Okay, we have very important information to cover on Palantir right now. Strap in, put your thinking caps on. There's a lot of things we need to discuss. Don't worry about looking for the subscribe button, smashing the like button, or looking for the coaching and Discord link. We will get to that and talk about it in just a little bit, I promise. I want to dive right into Palantir and explain to you guys what's going on and why it's a little bit of a risk right now. However, first, I want to let you guys know that this Friday, which is tomorrow, December 6th, I am hosting my free masterclass webinar, 8 p.m. Eastern Time, 5 p.m. Pacific. Everybody who has attended my webinars in the past said they learned more in the 1 hour they spent with me than they did anywhere else. I look forward to seeing you there. I have a huge announcement, and I'll be hosting a Q&A to answer any of your questions. Be sure to check out the link in the information box below if you guys want to register. Very limited spots remain. Every time I host a webinar, many students complain that they can't get in, and I'm trying to tell you, once we're full, we are full. I look forward to seeing you at the webinar tomorrow. So it's time to talk about the harsh reality of Palantir. It's made a very large run in 2024. I told you guys back in April, May, when it was $20. I told you again when it was $25 in June. To buy this stock, it is going to have exceptional growth, especially once the feds are more dovish, they start cutting rates, as they did, and the earnings calls got better and improved with Palantir quarter over quarter. But not only that, they were also added to the S&P, and I told you when that happened, it would become a part of the index, and when anyone invested into that index, the S&P 500 or SPY, it would in turn give them ownership over Palantir, raising the price. Most times when a stock gets added to the S&P 500, within a couple of months, the stock will pull back and level off. That did not happen with Palantir because it's a very strong company driven by AI. It's seen exceptional growth and it has beaten every stock in the stock market with the exception of SoundHound and possibly SoFi. It's beaten every single stock in the stock market for growth with the exception of SoundHound, which is up 377% year to date. We have 313% on Palantir, and Nvidia is far below 200%. Palantir has rapidly exploded. It is a great stock. I am bullish on this stock, and I think you should still look into investing into the stock if you haven't already. However, I just want to be clear on some very important things here, and in no way, shape, or form am I saying that I'm bearish on the stock or that I don't think you guys should invest into it, but I think there's something that needs to be discussed here, and that is the looming, not only possibility, but high probability that this stock is going to level off and pull back a little bit. You see, the biggest growth opportunity for investing into Palantir, most of the big portion has already happened. You figure even if the stock was to go to $300 right now, that is a 4x return. But if you had invested back in June when the stock was $15, well, right now you'd be at a 5x return. And it's a lot easier for a stock like Palantir to go from 15 or 20 to 70 than it is to go from 70 to over 300. So I'm not saying the stock is not going to run or continue to grow. I'm just saying the road forward isn't going to be as aggressive as it's already been. So this is a long-term hold. And a lot of people have been asking me, Corey, should I get into Palantir? What should I do? Should I buy shares? Should I buy leaps? Should I sell puts? What should I do with this stock? Take a breath, take a breather. This is a great stock. Nothing's changed. And the issue here is if you sell now and the price keeps going up, then what? Then you're going to get in at a higher price than you got out? That doesn't make any sense. So if you're holding right now, really it's going to be hard to time this. But if it looks like a pullback is happening, the stock is starting to drop, you could sell it. When it's done dropping and it starts leveling off, you could buy and add back your position. This way you're profiting on those gaps. But it's hard to say if and when they're going to happen and how long they will last. These pullbacks, for instance. I quite honestly see Palantir hitting a $250 billion market cap, which is going to give it about another 40% upside. So we could see Palantir realistically breaking $100 by summer 2025. It's very, very likely too. Maybe even slightly higher. But even if that was the case, that only signifies a 35% return versus had you invested back in June earlier this year, you would have a 300% return in the same amount of time. So really, it's not that Palantir is not still bullish. I'm very bullish long term. It would not shock me if this stock breaks 500 in the next 3 to 5 years, probably closer to 4 or 5 years. But right now, the short-term growth has happened. There's still some on the table, but a big portion of it has already happened. You don't want to be messing around with this stock by getting out now and then the stock runs and then you're pretty much screwed. You don't want to be in that position. So I'm not necessarily saying to sell the stock. What I'm saying is your expectations have to be curbed. This is all part of trading. Curb your emotions, just relax, and time in the market beats timing the market. Now, I'm pretty good at timing the market and where stocks are likely to go and unlikely to go. Palantir is a rough one because I knew it was going to explode, and it has a lot of momentum, and it has a lot of desire, a lot of passionate investors, a lot of belief in the stock, and it's a good company. But even the hottest stocks over time have pullbacks. They level off. They have short-term bearish windows, sometimes a few days, sometimes a few weeks, and there are those few times where the stock can be bearish or consolidate for a few months. Now, it's unlikely that Palantir would pull back for a few months, but we very well could see several weeks of pullback and consolidation on Palantir. So you have to be very careful because, like anything in life, nothing goes on forever. The stock doesn't just go up. No stock just goes up, up, up forever without leveling off or pulling back, and Palantir is due for one. So be aware of this. But I'm going to show you guys exactly what I would do to get into Palantir, start collecting juicy premiums, very juicy premiums, to help put into your brokerage so that if the stock was to pull back a little bit, you'd be collecting premiums on these strategies that I'm about to show you. And not only that, you can use these strategies to get into Palantir a little bit cheaper. Remember, this is a long game. You can still be buying the shares right now. You can still be buying the stock. And if the stock drops, you can dollar cost average, sell more puts, and build up a nice position size now. Even if your dollar cost average is 30 and you start adding in the 60s and it drops into the 60s, then you add some more in the 50s and then it runs again. Your dollar cost average might go up from 30 to 40, but now you have more shares. Having 500 shares at $30 isn't better than having 1,000 shares at $45 if the stock runs to 150. You still have more shares and are generating more profit. So you can't really think of it like I have Palantir at an average cost of 35, and if the stock levels off at a pullback, as an example, at say 65, I can't add to that. I know it's going to go up, and I know eventually it should get to 100 or more, but I can't add to this position because my dollar cost average is 35. That's kind of nonsense. You can't think that way. Trust me, 3,000 shares at 50 is better than 1,000 shares at 20. It just is. You have more shares, more growth, and the stock is going to keep going up in the future. It's a great company. You definitely want to add to your position, and you can help offset that with the strategies I'm about to show you. But first, if this is confusing you, dollar cost averaging, pullbacks, how the stocks move, news, earnings, all of these things. If you're trying to retire early, become profitable, learn how to trade and invest in the market, or maybe you're just flat out new and just don't even know where to begin, I would love to help you, fam. I offer a full Discord and training course and one-on-one coaching so that you can achieve your financial goals and achieve your financial freedoms. However, I have very limited spots. You guys can sign up at any time at investorcorey.com. The link is in the information box below. Look, I grew up in a Catholic household. My family, like I've said many times, very hard on me. My mom raised me to help others when I could, and my dad has spent the last 15 years helping homeless veterans get off the street. My family has been committed pretty much most of our lives to helping others in any way we possibly could, which is what drives me every single day to help my students like you achieve their financial goals. You can see all the comments on the screen of all the students that have profited and grown after joining my Discord. I have students that have taken $8,000 to $40,000 in 5 months, other students from $30,000 to $70,000 in the same time frame, and I have other students that have went from $300,000 to over $600,000 in 5 months. I also had students that were losing money, and as soon as they joined my Discord, they went from losing money every month to making several $1,000s every month on the same size portfolio. But don't just take my word for it. Let's take a listen to what my student Josh and Adam had to say. What stood out to you the most when you originally signed up for the Discord and the coaching, really gave you the incentive to want to join? And do you still feel the same way now? And what would your message be to others that are, in the same situation?
You were more focused on like the actual strategy of things as opposed to, pushing a particular stock or trying to like almost trick people into like how they can get rich. I'm also a masterclass student as well. And that's where I really took things to the next level. For anyone who's thinking about joining, is anyone can do this. It's just really like putting in the work and the effort to meet Corey halfway, but he will definitely get you there. I started with about $300,000 portfolio. Initially saw about between 60 and 70,000 within my first 6 weeks, which I was very excited about. So now I'm really excited to share that I've grown that $300,000 portfolio to well over 500,000. I'm definitely reaping the rewards now. Don't wait. I honestly like can't thank Corey enough.
What would you tell someone who's skeptical about me and learning options, or just from learning from someone online who is on the fence and needs motivation to get started? Like they're watching the YouTube videos, but they don't know, can I trust this guy? Can I trust the options? Or even if they trust me, can they trust what I'm teaching? Will they be able to learn? What would you tell them to motivate that?
In just a short amount of time, the program that you offer, I've learned so much, and I've changed my entire approach to investing. I'm much more structured, much more safe, and I've seen consistent, profitable growth. I've seen the growth, and it's almost like unbelievable. Like in a market that we're in now, I was still able to consistently grow because you're so methodical and structured, and you care about each student. I'm here to say it how it is, right? I've made consistent growth. So I started with 15,000, right? I am now at $40,000. Okay, and I'm so proud. It feels amazing to be able to share this, because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering, because he means so well.
So you heard what my students Josh and Adam had to say about my coaching and my Discord. You can go to investwithcorey.com. You can click on case studies, see other students' testimonials. Then you click on training and you watch this video. It will answer every question you have, because unfortunately, I don't have time to answer all of the questions right now. After you watch it, you will be able to book a call with my team and I, so we can get started building a master plan to help you achieve your financial goals and dreams. So looking at Palantir, they've had a very strong year, 312% year to date, 200% 6 months, and 130% 3 months. The last 3 months has been the strongest, with the dovish Feds cutting rates, the addition to the S&P 500, the SPY ETF, and of course, Donald Trump winning the election and all those uncertainties going out the window, and PMI data, inflation data getting better and improving. This all combined with great technicals and fundamentals, and the actual company itself, Palantir, doing very well and having good earnings. All of that combined is a dream effort in every direction for any company. So it's doing very well. However, a pullback is highly likely and highly probable. Now, if I was to go over the chart right now and just have a general sense of where this is going, you can already see there's some pullback happening and some resistance. If this continues to pull back, it very well could stop at 67 or maybe 65. Now, it's very possible because there's a lot of resistance up here. It's trying to push through, but it's likely, in my opinion, we'll get a pullback to right around here, which is around 63 to 64, and it could push back into the 55 to 58 range, which I think is likely going to happen. Now, I don't know when exactly, and I don't know if this is likely to happen for the new year. I think going into the new year, it's kind of 50-50, but more likely it's going to level off and maybe go up a little bit. I think as we get into the last week of December, first week of January, things could get a little weird with the stock, and we could see something like this where it comes down a bit, goes back up, kind of comes back down, hits this number, consolidates, maybe one last little run, and then a sell-off for the new year. First week of January, it could drop, have some consolidation like this, and then drop this number and just kind of dwindle down. And then after that happens, we know that earnings is likely to be good. And February is usually a decent month. And January is good as well. So it'll start coming back up. And then we start to have this run. And by the time we get into March, it could look something like this. And it's highly likely we end up over here around $80 to $90 by March or April. But this right here is likely. There's going to be some form of pullback to the $60 range. Between 55, somewhere between here and here is highly likely, which is between 55 and 61. Like somewhere in this area, Palantir is going to pull back. And there's also a decent chance, I would say probably about 50% chance, that we end up down around 50 to 55. I don't say it's 100%, but it's likely to happen, because if you look at the graph, clearly there's got to be some correction. And the moving average for the 100-day is 60. And a lot of the times stocks will come back and they'll touch it. Palantir did that right here, and it did it right here. And if we look at this, September 6th to November, it's almost 2 months. So we figure from November, January would be another 2 months. So the stock nearing the end of this month, beginning of January, is going to pull back. And this moving average is going to come up like this. So the moving average at that time is going to be right where I said it is, right here, 62. So somewhere between the end of December, beginning of January, Palantir is pretty likely to pull back to $62 or 60. And if it breaks the 100-day, a lot of times stocks will fall below the 100-day by quite a bit. We can see Palantir was below the 100-day here by about $1 or $2 for quite some time. And other stocks even more so. If we were to look at NVIDIA, you'll see a dip, something very similar to this. If that was to happen to Palantir, then we would see Palantir come down to 62, bounce up, come back down and break through, and it would go right into here. And what would happen if I get rid of some of these drawings, what would happen is this moving average would come up and the stock price would kind of come down like this and touch it. It would come back up and then try to fall below and possibly break through. And the moving average would start falling. As this number started happening, the moving average would come down kind of like this. And as we get closer to earnings, it would cross back up over the moving average. And I'll make this a different color. This way you guys can see it better. Make it red. You see how that moving average could play out. Very well could play out something very similar to this. There we go. You see, and what would happen is this would look like every other stock, and it happens to every stock. So with that being said, keeping this very simple, Palantir has a decent, and I mean probably 60-70% likelihood that we're going to see a pullback into the $51 to $60 range. In this area, somewhere, maybe it doesn't go all the way down to 51, but this is likely. Let me show you what I would do to dollar cost average and to keep adding slowly. And as it's dropping, I would add more. I'd add a little bit at 60, a little bit at 58. If it goes to 55, I'd start adding more. If it goes to 50, I'd add even more. But remember, don't go beyond 10% of your portfolio. So we're looking at Palantir here in Fidelity. I don't use Robinhood anymore. Robinhood is just not as good as Fidelity. I'm glad I switched. So this is what I would do. I would start selling weekly or bi-weekly put options on Palantir. If you were to go out to the 27th of December, I would say the safe bet would be about a 62 or 61 for now. You could generate about $100 in 3 weeks on every put that you sell. If you're able to do this 3 or 4 times, you could make $300-400, which goes to helping offset any losses or just helping you get more shares. But doing it weekly is a little bit more lucrative because you can kind of go with the momentum of the stock. If we look at the volume on the 1 week, 1 hour chart, we can see we've got a lot of bearish sentiment. So selling puts on the weekly basis for 65 right now is pretty safe. If we were to go look at December 6th, actually this week, we'll go to December 13th next week, a 65 is a delta of 21. Now, in a good stock like Palantir and on selling puts, a 65 is going to be good because a 21 delta is good. 21 delta is not that risky, especially on a good stock when you're selling puts, because it's, your money's not flying off to Narnia. You get the shares if you get assigned. And you can also roll. So what I would do is you could sell a 65 or a 64. To be honest, because the stock is starting to look like a pullback's inevitable, I would just sell a 64 and you would just click on right here to sell to open and you'd pick what you wanted to sell it for. Now, if you guys are new to selling options, you can sell naked puts or you can sell cash secured puts. Very briefly, a cash secured put, you put up to $6,400 collateral, and if you get assigned, that money is used to buy the stock. With a naked put, it's virtually the same thing, except the only difference is on a naked put, they call it that because you're not putting up all of the cash. You're only going to be putting up about 30% of the collateral, so about $1,900, maybe $2,000 instead of $6,400, and then you sell the put. And the risk is virtually the same because on a naked put, the same as a cash secured put, if Palantir falls below 64, you're still going to get assigned and buy the stock for $6,400 for 100 shares. What happens is the $2,000 collateral you put up, If the stock starts dropping, they start to take more collateral from your brokerage and add it to the 2,000. So as an example, if Palantir is at 69, they take 2,000 to sell the naked put. If Palantir drops to 67, $2, they'll probably take $1,000 more and add it to the collateral until it gets close to the strike price, and then you'll be at full collateral, pretty close to it. And when you get assigned, whatever they haven't added to the collateral, they'll pull from your brokerage and you still spend the $6,400. The only risk to a naked put over a cash secured put is if you over leverage. So if you have a $100,000 account and you sell puts that eats up all of that $100,000, the moment any of those puts that you sold start getting close to going in the money, then you're going to be over leveraged, because remember, they only take 30%. So if you use all of your capital to sell at 30%, when these positions go against you, and let's say they need to take 50% or 60%, now you're going to be 50% in the deficit and start having margin calls. But if you treat it like a cash secured put to some degree, it's safe. You have $100,000 capital, you sell $30,000 of the naked puts, the most you could lose is $80,000 or $90,000 worth of stocks that you would now own. So as long as you don't, keyword, over leverage, naked puts are totally fine to do, and I run naked puts, especially when you sell them at lower deltas. If you want to make money on Palantir by selling credit spreads and you're using Fidelity, then you could easily just click on the put you want to sell right here, 64, click on sell, then go over here to the buy. Remember, you always sell the bid, buy the ask, and you could buy a 61 for a 300 spread. There you go. You'd get a juicy $41 premium, and then you would just click preview and you would move forward. Now, if you want to sell a naked put, you got to make sure to select margin when you're selling puts. If you want a cash secured put, you select cash when you're selling puts. The same goes for calls. Fidelity will allow you to sell naked calls and naked puts on margin if you have level 3 options. Robinhood will not. Now, if we're going to sell a $64 put here, we can click on preview, and then we can go ahead and take a look at what the projection would be. If you come over here on the side and you click on this arrow on Fidelity, you can click on trade strategy, click on spread, and then you can go ahead and come in here and click buy to open a 61, and then you can sell to open a 65. December 13th, it's a put, collect $54 juicy premium, probably a little bit more. You could probably do maybe 58. If you guys want to sell some put credit spreads, you can analyze the profit by clicking apply, and it shows you the percentage of the likelihood, very similar to Robinhood. Doesn't look as easy to understand, but it's actually more powerful. It shows me that there is a 92% chance that Palantir stays above 66.49 by next week. Everywhere we scroll here, it gives us a profit calculator. So we go to 65.29 because we are selling a 65 put. The chances of Palantir staying above 65.33 is almost 98%. The chances of Palantir falling below $65 is less than 2%. So it shows you how strong of a trade this is. And I love this simulator on Fidelity. It's amazing. If you guys want to see a full tutorial, a full walkthrough and guide on Fidelity, comment in the comment box below and let me know if you want to see that video. Thanks so much, guys. Don't forget, masterclass webinar, absolutely free, tomorrow, December 6th, 8 p.m. Eastern Time, 5 p.m. Pacific. I hope to see you guys there. Don't forget, the link is in the information box below to register. Very limited spots remain. And if you want to join the coaching and the Discord at any time, the link is also in the information box below. Take care of yourselves, fam, and I will see you on the next video. One love, fam.